Hello everyone, good morning and welcome to today's morning report on Thursday the 19th of January with me, Rich Perry, market analyst at Hantec Markets. We've got a lot of the moves on these Forex markets, and that's coming after the comments from Janet Yellen yesterday. They came out more hawkish, or Janet Yellen was more hawkish than probably the market had been anticipating. She was talking about the fact that the Fed needed to sort of normalise monetary policy at a rate at which it didn't sort of come up against any surprise or nasty surprises. So it's sort of been taken as a sort of hawkish move by the dollar traders, and they've pushed the dollar index sharply higher yesterday. Treasury yields as well strongly higher. Now the 10-year yield, 2.4430. Bit of a reaction high there within the selling pressure. So I'm sort of taking that as a resistance. If you see the Treasury yields above that level, I think that that's a key sort of move to the upside and sort of change in sentiment, I would call that. So you'd sort of equate that on the 2-year yield as a move above 24.20. So there are levels to watch, I think, on Treasury yields, which would suggest that the dollar turnaround will continue. It's just dropped back lower again in the last sort of hour or so in the European session. So it's not confirmed yet as a recovery, but certainly this move or rebound on the dollar has taken the market up to some key levels, which are possibly some sort of big crossroads on these Forex markets, which I'll sort of take you through as I go through the charts. But some really key moves that we've seen. Now we've seen a rally back on the oil price, but it's still underneath. I've got 51.67 here. That should be around 52 figure, which 52 figure being sort of a pivot in the last sort of few months really. So I'd say 52 figure is still a key area of support and resistance. Currently resistance, so you'd need to see the oil price back above that to sort of start to regain a bit of positivity. But the breakdown yesterday, 2.7% down on WTI, was quite a strong move that needs to be recovered. So we've got these moves on the Forex markets and also commodities. Gold, for example, back at $1,200 area, which is a big key level there. Now, in terms of your data points today, you're looking at the ECB meeting being the big focus for markets. Now, that is at 12:45, where we get the main rates announcements. Refinancing rate 0%. And deposit rate 0.4% negative is the expectation there. No change expected. Now in the press conference, you are likely to see perhaps slightly more upbeat Mario Draghi. We had inflation the other day coming in ahead of expectations. You've had sort of PMI data, which is showing sort of stronger trends recently. So perhaps he'll be a little bit less sort of downbeat. But you're not really going to get too much movement. You had these big measures or increase in the length of the program for quantitative easing. You had that last month, so you're not likely to get anything major. And I can't even, for the life of me, imagine he would start talking about tapering. So I think it could be a bit of a quiet meeting in that regard. But we're also getting the building permits and housing starts for the states. Slight improvement on both expected there. At 1:30, jobless claims, again slight improvement, nothing too excessively interesting on that data point. Philly Fed slightly down from last month, down to 15.8 again at 1:30. Now the weekly crude oil inventories, that could produce a bit of volatility for oil. Likely or the expectation is for an inventory drawdown of 1.7 million barrels on the crude stocks. Distillates 1.4 million barrels drawdown. Slight gain in inventories on to 2.3 on the weekly gasoline stocks. So that sort of takes I'd still look at that as an aggregate, and weekly crude stocks does tend to get the headline sort of moves, but also distillates and gasoline will be interesting as well. So quite a lot going on today. Now my chance today is Euro Yen. I've found Euro Yen very interesting, a very interesting chart recently, because it did top out on a move below 21.55, But a big strong bull candle yesterday as the yen weakened has sort of unwound it back to that neckline. I'm taking it as a resistance between 21.55 and 22.40. This reaction high here that we saw on the 13th, which was last Friday. So a move above 22.40, I think, would be a change in direction once again, because that would also be above this 21-day moving average. Momentum indicators are interesting because they've just ticked higher, but basically RSI is back towards 50. MACD lines at neutral. Stochastics not confirmed yet in a tick higher buy signal. So this is, I think, a turning point for Euro Yen. If it can move and close above 22.40, I think that's a bull breakout. Or sort of bull recovery once again. It can sort of reopen the highs, but you can see on the hourly chart where this is a big sort of line here, arguably a pivot in the last sort of couple of weeks, really. Caught a few lows and subsequently became the resistance at 22.40. So we're not a million miles away from that now, but the recovery could be continuing because we've got strong momentum indicators on the hourly RSI and hourly MACD lines and stochastics. So the improvement has continued. So 21.55 old neckline becomes supportive. And obviously that key reaction low that we've got, a 2050 area that we've had in the last sort of couple of days. So some improvement going on in Euro Yen, but can it continue today? So a lot of volatility, I think you'd imagine, around this ECB meeting, although perhaps less so considering it's not likely to be an excessively interesting meeting, but still you do get volatility on the euro with that. So watch out for that at 1:30, and I wish you good luck in your trading today, and I'll speak to you later. Thank you.